Hello, this is Japanese Economic Review Channel. Welcome to our March 2026 CPI briefing. Today, we look beyond the headline inflation of 1.5% to uncover the true state of Japan's economy. While surface figures suggest normalization, our analysis reveals a hidden heat driven by robust corporate pricing power. Let's isolate the signal from the noise. At first glance, the overall CPI shows a moderate 1.5% increase. However, when we strip away volatile fresh food, the core index rises to 1.8%. Further removing subsidized energy exposes the core index at 2.4%. This 2.4% represents the underlying reality, a significantly hotter domestic economy masked by policy and volatility. Think of inflation as an onion. The 1.5% headline is dragged down by heavy drops in energy and education. The 1.8% core excludes wildly swinging fresh produce, like a 51.6% crash in cabbage prices. The true 2.4% core reveals persistent inflation in processed food, tech services, and durable goods. Following a cooling trend from late 2025, March 2026 marks a slight reacceleration across all three major gauges. For example, the overall CPI expanded by 0.2 points from February. This upward pivot suggests that inflationary pressures are regaining momentum, resisting a smooth decline. March inflation is highly polarized. Surging upward forces, led by food at 3.6% and culture and recreation at 2.5%, are heavily offsetting dramatic downward forces. Specifically, we see a 4.8% drop in both energy and education costs. It's a market deeply divided by extremes. Within the 3.6% food increase, extreme item-level shocks are evident. Imported commodities are soaring. Chocolate is up 24.0%, and coffee beans a staggering 54.0%. Conversely, fresh vegetables plummeted 10.5%. Severe price hikes in indulgences are temporarily masked by volatile crop yields. Energy presents a mathematical paradox. While prices are down 5.7% year over year, this is a smaller drop compared to February's 9.1% decline. This shrinking discount acts as an upward pressure, adding 0.26 points to the overall CPI momentum. Cooling subsidies are indirectly heating up the headline. We see a stark contrast between organic market forces and public policy. Market services display robust pricing power, with mobile charges jumping 11.1% and accommodation up 5.0%. Meanwhile, a massive 94.1% deflation in public high school fees acts as an artificial anchor on the overall index. Looking at month-over-month seasonally adjusted data proves prices are actively rising right now. The overall CPI jumped 0.4%, a sharp reversal from February's negative figure. This velocity highlights immediate, active price hikes applied by businesses at the end of the fiscal year. To conclude, do not mistake the 1.5% headline for consumer relief. We have a split reality: shocks in imports and anchors in policy mask, the persistent hidden heat in tech, dining, and processed foods. Corporate pricing power remains intact. Understanding this dynamic is crucial for strategic planning. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.